let's look at an uptrend here. So let's go back to June and July on the New Zealand dollar on, say, a 4-hour bar. See if my data will correct. There we go. And I just upgraded my ensign, so looks like that might not have been a good decision. And just bear with me a little bit here, folks. My computer is locked up completely. Or at least ensign is locked up completely. There we go. Got much more patient in my old age, instead of closing things down and bringing them back up. Okay, so remember we saw a trend, and I'll have the daily where I can bring it in. So here's the daily. Remember, we were seeing these areas where the market's moving up, but it forms a hand right here, moves down, moves up, forms a hand. Well, almost. That pokes up a little bit. Forms a hand over here. So what we're witnessing on a shorter time frame, let me match these up. Here was the first hand. Okay? Now, doesn't this look like the same type of pattern that we saw on the daily when it was in a consolidation area? So the daily is showing us a hand pattern. But what we're seeing on the short term is consolidation. This is the reaccumulation. Now this could also be what? Distribution. Right? We don't know which one it is. If it breaks above the top end of the accumulation area, logically we would think it's been accumulation. So we're going to look to trade above that. Right? Same thing over here. What does this look like? It's boxing out. Well, we're either reaccumulating or we're distributing. If we accumulate, it's going to break out above the top end of the accumulation zone and continue moving up. So while we're taking positions in this area, and this is where we'll see the weave, this is where we trade in one lots. Whether it's regular lots or mini lots or micro lots, one lot. I want to put on a small position in this area. And then as soon as the move proves itself, that was just way too thick. There we go. As soon as the move proves itself, this is where, I might put on 5 lots. Because now the risk is lower. The move has number one, proved itself, but if I'm carrying positions from back here, I also have a bit of profit to help defray some of the risk. Okay? So the most important aspect of money management isn't the, killer formula or some kind of super secret sauce. It's understanding where your biggest risk is. Because remember, it doesn't matter how good the system is, it doesn't matter how good your formula is to manage your money. If you wind up taking on too much risk over here, and the market blows out against you, like the Japanese yen trade did initially, you wind up taking a huge loss. And over time, that, especially on a trend following system, that is the bane of your existence. Taking big losses when the risk is the highest. Now the risk is high for a couple of reasons. Number one, it's high from a price standpoint. Okay, because you have to remember, if you have this battle going on between the sellers and the buyers, when you're getting in on a breakout, you're in at essentially the worst possible position. You're getting in at the high of a breakout range. If it fails, the market is going to move quickly against you. So the risk is both in terms of price positioning, but also psychological positioning.